Hey, everybody out there. Welcome to today's live episode of That Crypto Show. It's Wednesday evening and it's the day after tomorrow. Maybe somebody still remembers this movie from, I think it was the 80s. But in our case, we're of course not talking about war. We are talking about economic events that happened yesterday that we want to touch base on today. And I originally had planned, under normal circumstances to use this live webinar today to show you some charts that have interesting technical updates, but we have to be a little bit realistic at the moment here. We are living in times now at the moment where chart analysis only helps you so far because the world is really, really driven by economics here at the moment. And I think we have to adapt to that at least a little bit, and I want to use this live stream, this live webinar here today to show you how I do that, what I think we can expect walking forward the next week. And I think it really can be condensed to just a couple of figures, a couple of charts that you need to watch. And if you do so, you probably be ahead already of a lot of other people's, a lot of other traders out there. And I think this is really all that counts. So join me today as we are looking at a couple of charts, and I really invite you to save those charts also, so you are a little bit prepared on what is to come the next weeks and the next months, as a matter of fact. So let me share my screen here. All right. As always here, before we start, guys, of course, this is a live webinar. So if you're watching this live, please feel free to drop your message in the chat here. We're going to take some sweet time, of course, towards the end of this webinar to answer some of your questions. There are no dumb questions, so just shoot everything out. We are living in special times, in really very challenging times, as I want to also show you later today by the talks I had with institutional traders also this week, or as a matter of fact, this afternoon I did already. And so whatever is on your mind, what you feel insecure about, if you want to have an opinion, just shoot it out. If you're watching a recording of this, of course, please leave a comment with your question, and be rest assured I'm going to answer your question there to the best of my knowledge. Also make sure to, and I'm going to use this nice bands now that are available here on the streaming program I'm using. Also be sure to join our Academy Telegram channel, because there's one thing doing a webinar like this every week. Another thing is that we need to react to certain stuff on a daily level here, really. And if you are, for example, a part there of the Telegram channel, you would have seen also that I used today some prices here in euro dollar, as you can see here on my chart, to build up another short position in euro dollar. If you are interested in the circumstances of this and how this came up to a decision like this, if you want to see more trades from me, please do me a favor and join me on the Telegram channel there, really. A lot of stuff I'm talking about there, and I think it's really worth your while. By the way, we also have a trading competition at the moment going on, and of course this is only for people on the Telegram channel. But enough advertisement for today. Let me drink a little bit here. Late night coffee, already late night, so to say. Well, I'm a father, of course. Everything past 7 is already late night for me. So let's talk about really why the release of inflation data we saw yesterday has really changed the whole world, and also why, in my opinion at least, really just having chart analysis as a foundation to search for your entries and exit from crypto trading positions, from all positions, by the way, at the moment. So if we're looking at the financial markets as a whole, is not really going to help you, in my opinion. And I'm going to explain to you in detail why I think like this, and what has to change, in my opinion, that we are returning to more of a normal market where chart analysis really should be your first weapon of choice. And I made a video last Friday called The Closing Bell, where I kind of summarize everything that has happened the week. Last Friday was the first episode of this, so next Friday is going to be the next one. And I drew this line into the chart where I said, hey, a soft landing in the S&P 500 would be something here around 3,400 and 3,600 points. We might move up here to that point again. Little did I know that my prophecy, so to say, would become faster true than I expected. So this is really where we topped out yesterday when we went down again. And we did so because of this crazy bad inflation data that came out again. Actually, it's not that bad, guys. I mean, we had a forecast of 8.1%. We came in at 8.3%, so it's worse than expected. The market doesn't like to be surprised on the bad type of thing. But nonetheless, if we look here in the grand scheme of things, still the inflation number was lower than what we had the month before, where we had 8.5%. Okay, it's not as falling as fast as we would have wished. However, the devil's in the details here, as always. What the Federal Reserve Bank in the USA, actually all around the world, are looking at is the so-called core inflation, which is inflation based on a large bag of consumer goods there, but it excludes so-called volatile foods and fuel costs. And those fuel costs, of course, or energy costs in general, are a big driver of inflation. Everybody who is currently staying in Europe, or maybe if you're watching this from the UK, you know exactly what I'm talking about. If you've gotten a mail from your energy supplier, probably there were bad news saying like, oh, I'm sorry, you have to charge you double or 3 times or even 4 times of what we have been charging you before, right? Now, this core inflation is, as I said right now, what the central banks are looking at. And it was forecasted at 6.1%, but it came in worse at 6.3%. And this leads to the market expecting that the interest rates, that first of all, the central banks are going to become more aggressive, even in fighting inflation. They can do so by hiking interest rates. And second of all, it means that probably inflation is going to stay at a higher level for a longer time than the market was hoping. So what the market was hoping until maybe like 3 weeks ago, until Jerome Powell was, I think, 2 weeks ago actually, held his last speech, was that inflation is bad, but eventually, it's going to come down again when we are going to see an environment where interest rates are coming down, which is going to make so-called risk-on assets more attractive again. Risk-on assets are assets such as stocks and cryptocurrencies. So everything where you have to risk a little bit more, but in the expectation of having more return in comparison to, putting your money with a bank on a savings account or buying something like state treasury bills. That's a difficult word, right? And now the reality that we are seeing is twofold. So first of all, what the central banks have done so far in terms of inflation seems to be not as fruitful as they hoped. And so we are preparing, the market is preparing for interest rates to stay at a higher level for a longer time. And the stock markets, cryptocurrencies, they don't like that. Really, they don't like that at all. And you can see really by the reaction there yesterday. I mean, if we look here at the S&P 500, if we zoom a little bit and we look at Bitcoin, this large red candle here, that really, they didn't like that. Everybody was surprised by this, caught on the wrong feet, including myself, by the way. I also thought like inflation would be maybe at 8%, maybe at 7.8%. But, as it always is in trading, we need to adapt to reality. Now, the problem, as you might already see, is this is something a move like this suddenly down, you cannot really predict with chart analysis. Yeah, you could have said here in the S&P 500, well, Dirk, we had the situation right here now where we have a typical bear market. We made a top here, and then we made lower highs here, here, and here. And you said, well, the next one is to be expected if the trend continues here. And this is what happened here. But it happened faster, probably, and because of the fundamental data release. So it's something really, really, really hard to expect. You could see yesterday by the reaction that a lot of people were caught on the wrong foot by that. So the question here is, and maybe you see this already now, is that, with everybody eyeing economic data like this, inflation data yesterday, we are going to have here on September 21st, which is actually next week on Wednesday. So 7 days from now, we are going to have the Federal Reserve interest rate decision. And so far, if we turn back the time now by, let's say, actually just 2 weeks, everybody was expecting, we are just going to see 0.5% in interest rate hike. Now, almost 100% expectation is 0.75 already, with some people already speculating about 1% in interest rate hike. And this is something the stock market and cryptocurrency markets do not like, because if you are a big investor and you have a choice of, I'm going to park my money in treasury bills and I'm getting then maybe 3.5 or 3.75% in interest rate per year. And if I want to invest in stocks, I need to take the risk. My expectation maybe is at 7%. I'm a pension fund, Bitcoin, cryptocurrency, I'm not going to touch really because it's all a scam. The argumentations there. And then the choice is quite easy. You're going to buy the dollar, you're going to invest in US treasury bonds. And this is what we're seeing here. And this brings me actually to my second chart, which is the US dollar index, which shows how strong is the US dollar in comparison to other currencies out there. Now, one thing is, whenever the world is in crisis and everybody out there, and if I say everybody, I really especially mean institutional investors. So people that move billions of US dollar, billions of euro, whatever the local currency is, of money out there, because they make really the prices by the end of the day. And what you'll usually see is, in times of crisis, is that everybody is going to invest in the US dollar. No, I want to bring that's the higher interest rate. I want to make sure US economy normally is strong. It's the first to recover usually. So I'm going to invest my money into the USA, for example, with bonds. And this is why we've seen, especially in the last year, so really this extreme uptrend we've seen here has really taken off maybe since September last year. So for the last year, really, when inflation started hitting the markets. And if we zoom out here a little bit, you can see here, we haven't been there. Even in 2008, when we had this financial crisis, the banking crisis, we were by far not there. And this is something we also see, for example, in euro dollar. This, by the way, is a trade I've been doing now for over a year. Whenever I see euro dollar recovering a little bit, I short euro dollar. As a matter of fact, I just did this today. I think I mentioned this earlier already. So just that you see that I put my money where my mouth is. So I shorted 500,000 euro versus US dollar earlier today. And because I think this trend is going to continue, we're going to see higher interest rates, not probably, there's a 100% certainty in the USA again, especially in comparison to the Eurozone, which probably is going to lead, especially in this risk-off scenario, to more demand for the US dollar again, which means we are going to see euro dollar following the trend here. And I mean, I'm not saying here, you should really just watch those trend lines here, but I think it's very easy to identify here that euro dollar is in a downtrend with the US dollar getting stronger and stronger versus the euro. And I really, really wouldn't be surprised here if we are somewhere at 0.96, 0.95 by the end of the year. If we don't see a turnaround really in inflation, if we don't see the hopes getting high that that interest rates are coming down soon again, then this whole trend is probably going to reverse. Now, I'm talking so much here about economic data because there's one thing I really want you to understand, because I'm seeing a lot here. So here on Bitcoin, for example, social media posts out there that do something like this. It's saying like, attention everybody, alert in Bitcoin. We are forming here a triangle at the moment. And usually what this says when it's going to break out to the north, we are going to see heavily prices breaking out here to the north, and we are going to back to 30,000 then. There are a lot of posts out there. There are a lot of videos like this out there. But I think it's only fair to understand, it's only fair towards you, in my opinion, to understand that the financial market is a very complex, a very complicated ecosystem driven by a lot of variables that, even people that have studied their lifetime economics do not understand completely. However, what we can clearly see at the moment is that chart analysis, at least for the short term or the middle term, so I'm talking about swing trades here, does not really help you. After those 5 days, 1, 2, 3, 4, 5, actually 6 days in a row in Bitcoin we were seeing, you saw that on social media, right? You saw like everybody getting optimistic again. Yeah, we are going, this is it. The bear market bottom was in. We are going to switch now. And then one economic number comes out, one fundamental fact that completely turns the picture upside down again. So in these times like this, you have to watch this economic factor. Do not just rely on charts, whether it is something like the S&P 500, whether it is something like the euro dollar, whether it is something like Bitcoin, whether it is something like Ethereum and the upcoming Ethereum merge and change to proof of stake. And I'm going to talk about this, of course, also in a couple of minutes here. It won't help you. And this is, no, I'm not saying by all means, that you never can rely on technical analysis. A lot of my trading is based also on technical analysis, especially my day trading, especially my so-called swing trading, where I just want to hold on for to positions for a couple of days, maybe a week or two. However, this is what, where maybe something like the Gaussian bell curves, so the so-called normal distribution, and I don't want to bore you too much with math here, don't worry, but if we translate this to the financial markets, is that normally about 68% of trading takes place in this top area of a bell curve, meaning like the economy is functioning normally. There are some companies that are earning good money, some companies bad money. Cryptocurrencies are functioning normally. And this is where you can use technical analysis. This is where technical analysis is going to give you an edge. However, right now we are in this probably lower 0.1%. So on this side here, the very left, on this side here, the very right, where you cannot rely on technical analysis because it's such an extreme environment and such an extreme economic environment out there that everybody's just eyeing on what the economy is doing. And this is exactly what we saw yesterday happening. We had the same slump down in the S&P 500. We had the same reaction down in Bitcoin. We had the same reaction down here, if I zoom in a little bit, in euro dollar. So the charts all look alike. So why should I analyze a Bitcoin chart? Why should I analyze a euro dollar chart at the moment? Why should I not go to the chart that influences it all, which is probably the S&P 500 chart or the Nasdaq chart or the DXY, the dollar index chart, in my opinion. So this is going to continue probably for a while. Now I want to go back to what I told you earlier, that I had a call with friends of me that are institutional traders. Institutional traders, meaning they are working for banks, insurance companies, for hedge funds, and they earn the money on a professional level, on a bank level, by trading or whatever financial instruments they're allowed to trade. And I called a couple of them this morning and I asked them, what are you guys doing currently? And everybody again said, Dirk, after those numbers, we are sitting on cash. We are waiting for the right time to invest again into risk on assets. For them, that's mainly stocks. Maybe in the future it's going to be cryptocurrencies as well. And this really, and if you've been watching this channel for a while, if you've been following me on Telegram as well, or on Twitter, you have been seeing me talking about, yes, I think we are close to the bottom of the stock market and cryptocurrency markets, because once, as we saw here in the past, inflation is coming down, usually this is somewhere the bottom of the stock market, and it's worthwhile investing again. However, I also always said there is this election pattern. So the stock market, the S&P 500, is behaving exactly the same, not exactly, but largely the same way under Biden now. Sorry, my mic dropped there. My mic getting tired probably already. So the stock market is behaving in the first 2 years after the election of Biden, kind of the same way that it did after Trump. And if you notice, after Trump, there was this one phase where we had the slump down, and I said, okay, what is going to happen? What could cause this further slump down here until probably beginning of December? Well, now we have maybe the recipe for disaster. Maybe it's really interest rates, maybe even being hiked more than we are expecting at the moment. Maybe we're going to see this 1% next week, Wednesday, in interest rate hike. Maybe this is driving down the stock markets, but rest assured, and I really want to leave here on a positive note, this whole disastrous picture we are seeing here at the moment is that this is also going to be a great, great opportunity for you to invest. And I hope it also shows you that you do not always need to trade cryptocurrencies, especially when it comes to altcoins. Do altcoins really have a life of their own at the moment when it comes to trading? No, they are copying Bitcoin, they're copying Ethereum, right? But you also maybe should have a look here at something like the S&P 500, at something like euro dollar or other currencies. I invite you to have a look, for example, at US dollar and Japanese yen, which is a crazy, crazy chart at the moment. And to find your chances for trades, especially for swing trades there. If you are unsure on what to do, it's completely okay to stay at the sidelines. Do yourself a favor. Do not lose the big picture out of your eyes. And if you have difficulties following the big picture, please join the Telegram channel. Really, this is exactly what I'm doing there on a daily level, to try to keep up with the big picture, inform you guys about, okay, this is going on, this is the sentiment, this is what everybody is looking at. And if I say everybody, I mean everybody that matters on the market, that is able to move prices. All right, let's look at the last chart for today, Ethereum US dollar. Probably you guys know we are going to have the change to proof of stake with Ethereum finally now. So in about 11 hours, 40 minutes, this is going to take place. It's a big, big event. The two most valuable cryptocurrencies in market capitalization are going to fight out with, algorithmic war. Let me put it like this. One of them having proof of work, Bitcoin, one of them having proof of stake, in this case, in Ethereum. And of course, a lot of people asked me this week, is this going to have an impact on the price? Now, if we would be in a bull market right now, so if this would have taken place 1 year ago, I would have been 100% sure that we would have seen an insane reaction to the upside by Ethereum. However, as we can really see here in the past days, Ethereum is also not behaving differently from what we've seen in Bitcoin. In many ways, actually, it has performed worse than Bitcoin in the last couple of days, at least, that is. And so maybe it's going to be non-event. I don't know. I'm happy to see on a technological level, of course, that the developers are not influenced by, hey, are we in the bear market? Are we in the bull market? So technology normally, or improvements to technology normally long-term should lead to a raise of price, a raise in value as well. So is it going to have an immediate effect? I highly doubt it, honestly speaking. I hope there are also going to be no technical glitches. If we look at the chart here, and I just said, it's not so good at the moment to look at the charts, to at least just base your decisions on that here. We can see really the same picture. You know, if I zoom out here, we are seeing in Bitcoin at the moment, or probably with almost any cryptocurrency, you are seeing that at least in the top 30. All right, good. Half hour almost done already. Let's see if there are any questions. Let's see here. Charting crypto. Can you look at quant? You are asking. Can you be more specific what you mean, what you want to see there? You want to see some on-chain metrics maybe? Or what does that mean? Yeah, this is exactly what I wanted to indicate just now. I think you really nailed that one there. ETH has to merge. ETA merge has to go off without any flaws. If there are any whatsoever, it will tank. Definitely. I mean, imagine that we're talking about the second largest cryptocurrencies worth hundreds of billions. And in market capitalization, that is. And of course, if there is any technical glitch there, any exploit, any possible hack or something, this is going to be a disaster. And I don't think there is going to be, but you know, who am I? I'm just a trader. I'm of course not a hacker. Yeah. Let's see another one here. ETH has been outperforming BTC lately. If ETH tank, there's a good chance BTC might be dragged down with it. I think I see it the opposite way. If ETH really tanks because there's a flaw in proof of stake, I actually think people might change either into stable coins or into Bitcoin and kind of see proof of work as the superior algorithm. But only time will tell, of course. Here, and of course, we don't want to, you know, we don't want to ignore here critical comments as well. Why is the spread so massive on your platform on the S&P? We've seen a little bit widening in spread. I noticed that yesterday also when I traded. It's simply because everybody providing liquidity in this S&P CFD yesterday and today was completely unable to predict where's the price going. And whenever you have this unpredictable events, spread will definitely widen. So it's nothing because Prime XBT wanted, you know, you to have a lesser chance of winning there. By all means, I mean, they just got rid for a couple of weeks of all trading fees for CFDs and Forex. And it's very normal that you see something like this, especially during news events or in times where there's a lot of insecurity in the market. However, with moves like this, I mean, we are talking about moves of several hundred points really per day. You know, I think there's not too much an issue if you pay a little bit more on spread. Maybe, of course, if you are scalping like the 1 minute chart or 5 second charts or something, things might be different. Maybe you should stay at the sideline there. But if you are planning on holding onto positions for a day or even longer, or at least a couple of hours, it shouldn't make such a difference there. Alrighty, good. Any more questions? Not, and probably there was a lot of more stuff I wanted to talk about today, but I think I've already drowned you guys here really in information. So if you take home with you now from this webinar tonight, that have a look at economic data. Do not base your decision making on just looking at the Bitcoin chart and trying to analyze there's something, because and this is really what do I have this here still? I don't have this chart open here at the moment, but if you overlay the performance of Bitcoin with the SP 500, you can see the clear correlation at the moment that Bitcoin, the cryptocurrency market, is copying what the stock markets are doing. And this is completely normal. I don't like it. And a lot of people are telling me, well, Dirk, I thought Bitcoin is supposed to be a deflationary asset. How come it's going down when we are in times of high inflation? Yeah, because the market is perceiving it as a risk on asset. And this is actually good because it means we are still early when it comes to cryptocurrencies. The next step will be, once people out there, once investors, once company notice that, hey, this Bitcoin is actually a good protection against the devaluation of, for example, my US dollar on my balance sheet, things will change dramatically. Then you'll see performance that probably is going to, that is probably we've never seen out there. And I'm going to, if is that going to be next year? Is this going to be 10 years, 20 years down the road? I don't know. I do not know. I'm very positive for cryptocurrencies, especially for Bitcoin. And I can only ask you, stay patient. Stay patient. We are probably through the largest stretch of a bear market already. I wouldn't be surprised in November, December, when things slowly start to change again, and we are going to see an uptick also in cryptocurrencies, maybe to 30,000, maybe to 40,000 in Bitcoin. If before that we are going down to 15 or 10 or even lower, I do not know. But one thing, if I look into the past, I do know that prices like this in a bear market that are 80 to 90% below the last all-time highs usually were extremely good areas to invest into Bitcoin and into Ethereum again. So I want to leave you on that high note, and thank you for watching. Please leave us a like, subscribe to our channel, and I'm going to see you latest on Friday again when we are airing the next show of The Closing Bell. Thanks for your attention.